Okay, guys, so can you guys hear me? Okay, so I welcome everybody. Okay, so I welcome everybody to this webinar. Can you guys hear me? Can you guys hear me? Okay, so okay, that's great. That's great. Thank you so much, admin, and thank you so much, everybody, for responding to me. So, guys, today we are speaking about trading psychology. Okay, Rashid Zamir Rao Saab is asking about SMC and price action. Okay, so we will discuss that in upcoming webinars. You can keep asking questions if you have any questions. I always welcome you asking questions. Okay, thank you very much. Thank you very much, everyone, for responding to this simple question of mine. I welcome you to this webinar. Salam, namaste, sasrikal, good evening, good afternoon, good morning, good evening, wherever you are from in the world. Okay, from Nigeria. There is someone from Nigeria. Okay, guys. So today is probably the most important session of our webinar series. Now, why do I say this? I say this because there are so many people, so many traders in the world who have mastered the art of predicting the markets. They are able to predict the market with uncanny accuracy. They have a lot of skills in predicting the markets, but even then they are stuck. And the problem with them probably is psychology or risk management. Now, we have already had trading risk management webinar previously, so if someone wants to go and take a look at the risk management seminar, I will encourage you to please search on this channel of OctaFX, search about risk management seminar with my name Saeed Sheikh, and you will get a webinar on risk management. But let me ask you guys, what do you think about? Okay, so I have a question about trading fears. Okay, yeah, sure. Rahul MKSG, we will discuss about trading fears. Noble Trader from Japan, hi Noble Trader ji, thank you for coming. Sunil Kumar is asking about $50 lot size. I will say 0.01 lots on GBP USD. Let's make it 0.02 on GBP USD and 0.01 on gold. So let's go ahead, guys, and let's discuss, because we have literally too much to cover today, and we are gonna run out of time. So first of all, these are the things which we will discuss. As you can see, there is quite a ton of material that we are gonna discuss, and in the end we also have an amazing announcement for you guys. So you will have this. There are no perfect strategies. Noble Trader, you are right. Yes, there are no perfect strategies, only perfect mindset. So we should take care of our mindset, not our strategies. Well, we have to learn the strategies, that's without any doubt. But we also have to take care of the mindset. That's why we are here for our trading psychology webinar. Okay, so Om Prakash Yadav ji, hi. So today we are going to discuss something about why trading psychology matters. We will discuss the rules and why rules are important for you. We will also discuss why you make trading errors, why you always keep making trading errors. Good evening, Ajay ji. And we will discuss about trading fears. So there was a person earlier who wanted to talk about trading fears. Rahul MKSG, we will definitely discuss about trading fears, and we will discuss about creating confidence in trading. And then in the end, I will leave you with 10 habits of successful traders. So first of all, I want to show you guys a picture which I have kept in my trading office. So I got a trading office over here, and you guys can look at this. You guys can you guys see this picture? Who is this person? This guy is called Alexander Elder. And you see the core idea, the core message from this guy is that discipline is the key. Now this is something which I also want to remind myself. Look at this. Discipline is the key. So this is something which I want to remind myself every single day. That's why I'm keeping this picture of this person, this trader. He's a legend. So I'm keeping this picture of this person in my office because I think it's very important. I'm a trader, and if you want to be a trader, it's important that you keep reminding yourself about the discipline. And the discipline is part of trading psychology. So today we are going to discuss all these things. I'm completely beginning. So you are a complete beginner. Amol Gunjalji, you are a complete beginner with Forex. Yes, you have come to the right place, Amalji. You have come to the right place. Phoenix G, how to exit the losing trade. I will discuss this. Okay, so Amalji, you have come to a very right place, because today we are gonna get you started with trading psychology. But I encourage you to please go back, because this is my trading webinar number 6. So can you please go back to trading webinar number 1, 2, 3, 4, and 5. After you are done with this webinar, please go back and check all these 5 webinars, because they will help you immensely in your trading. I'm sure they will help you a lot. And then if you have any questions, you can ask me the questions in our next webinar, which is gonna be held just 1 week from now. So we are gonna have another webinar just 1 week from now. So first of all, why trading psychology? Why do you think trading psychology is important? And actually the bigger question is, do you think psychology is important at all? Well, you ask yourself, do you want to overcome all the trading fears? Do you want to keep trading for life? You want to build an amazing trading career? You don't want to lose back everything to the market. So there can be many types of traders, but let's go through the 2 types. So let's say there are 2 people. So there is this trader A, there is this trader A, and there is this trader B. So what's the difference between these 2 guys? Trader A, she earned a lot of money and saved it up. And there is this trader B, let's say it's he earned more than A, but lost all of it. Which trader do you want to be? Which trader do you want to be? So ask yourself this question. Do you want to be trader A or trader B? If you want to be trader A, then this webinar, psychology webinar, is for you guys. And if you want to be like trader B, then you might not take trading psychology very seriously. But most everybody else has to take trading psychology very seriously. Why? Because trading psychology will give you confidence. So today we are gonna discuss how to build confidence and how to overcome the fears. Okay, I got some response from you guys. Bilal Rajput says A. ARM239 says A. Yeah, that's right. You should strive to become trader A, not trader B. Because if you are trader A, you will earn a lot of money and you will keep most of it. Well, of course, trader A also sometimes loses money. Losing is not a problem. Actually, all great traders know about this. Losing is not a problem. The only problem is if you have bad psychology, if you have bad mindset. Trader C earned more than A and B and saved it. Okay, so no be trader. That's good. No be trader. Akeem Ajao ji says A. Okay, yeah, that's right. So Sumit ji is saying A. Yeah, you should try to become trader A, not B. Ranveer ji. Now, how do we become trader A? And how to avoid becoming trader B? Well, let me tell you at the very outset, the road is not simple. There are so many ups and downs on this road. There are so many bumps in the road. There are so many rough patches which you have to overcome. The terrain, the road is extremely hard, extremely difficult. But let me assure you, the reward at the end of the road is worth the journey. Actually, far more worth than the journey itself. So make sure you wanna stick around to learn trading psychology, because it is gonna change your trading forever if you really pay attention. Now, first of all, if you wanna be a trader, a good trader, a professional trader, you got to make some rules. First of all, make your own rules and then follow them. Now, first of all, how do you make some rules? Well, I'm gonna give you some examples. I'm gonna give you an example of the rules. But once I give you the examples, it's not that you should always follow my rules. I'm just encouraging you to make your own rules and always follow them. Mohammad Fahim and Sandeep Singh ji are saying A. Okay, so how do you create the rules? Well, you can study from the books or you can learn them from this webinar. I will give you, as I said, a sample of the rules which you can follow. But you have to make your own rules and always follow them. And why rules are important? Why? Let me show you why rules are important. Now look at this. Okay, let me remove this moving average because it's also something which I gave it. Now, do you guys realize that when you look at the market, it's like this. It's like this. The market is just like this. There is very little which you can understand from this type of market, right? So the market is highly unstructured. And like every unstructured thing in the world, yeah, of course, no be trader, you can modify your own rules, but you should always follow them. Once you are done modifying your rules, please always follow them. So if you look at this market, it seems pretty erratic, right? Pretty erratic. There is no structure to this market. So how do we know whether we should buy or sell or do nothing or whatever? How do we come to know about this? What to do in this condition? What should we do? So it's not easy to confront the market without rules. That's why this type of unstructured environment is so dangerous and it's so strange that we need rules. So what are the rules? Well, rules are the guiding posts. Rules limit our behavior because in the market, you can fulfill your wildest dreams of earning a lot of money. But simultaneously, market is presenting you with a lot of fear and a lot of risk. There is a real risk in the market to take away everything that you have and more, to put you into a lot of stress. So if you don't follow the rules, believe me, you will always be in a state of agony, in a state of anxiety. So you need to follow the rules because they will limit your behavior. Now, how do we make our rules? We will come to that in a minute, but let me give some structure to this market, and that structure can be given by our rules. So first of all, what I will do is I will put, for example, I will put volume in this, volumes, simple volumes, simple. And I will also put, let's say, EMA, exponential moving average, EMA. So I'm putting EMA. So there you go. The market seems more intelligible now. Market seems to be structured now, right? So I'll give some more structure to the market. Let's say this is uptrend, so I'll make an uptrend channel and I will put it over here. And we saw that the market went up through that, so I'll put another line, through this. So I'll put this, let's say, over here, and this is a SOT line, shortening of the thrust line. And then we have something like a long-term resistance over here, important key level. We also have a support level in the market bottom. So this is more structured now, right? Okay, let me put some more trend channels right here. So I'll make it red, let's say, and I'll clone it. I'll put it over here just to indicate that this is oversold and then the market went up. So the market is breaking this trend channel and then going up from here. So now you see you can see that the market is a little bit structured now, isn't it? Okay, Nobi Trader, which is better, naked chart or in chart with indicators? Nobi Trader, I have studied all the indicators. Actually, I am doing PhD on technical analysis and the use of indicators. Currently, I'm enrolled in a PhD program. But I would say in all frankness and honesty, I think indicators can be sometimes useful, but learn to make your own charts. I mean, learn to make them with the help of support, resistance, and trend channels. I think they are more than enough, and volumes, of course. So don't put indicators. This is my piece of advice. If you want to follow indicators, well, that's okay, no problem. I have no problem with that. But indicators, I think they make our trading a little bit harder. If I start with $10,000, 10,000 Indian rupees, then what will be the lot size? Okay, so you can look at the Indian rupees. Please convert it into dollars, and if your dollar amount is around, let's say, $100, then I would encourage you to put 0.03 lots of GBP USD or 0.01 lots of gold XAU USD. Okay guys, so let's go ahead now. We were discussing that it's important to make the market look simple. Okay, so Tawqir Usman ji, can you please go to this channel, OctaFX channel, and search the videos on Said Sheikh. So just search Said Sheikh OctaFX in YouTube. Search Said Sheikh OctaFX, and all the videos of OctaFX will come up. So you can search. You can also look them at the channel, OctaFX channel. Okay, so I already told you that rules are important, and I just gave you an example of how to structure the market. Now there is quite a lot to learn from this, but we also need to have rules to limit our own behavior, not the behavior of the market, because just now we used something which was able to limit the market behavior, not our behavior. So how do we limit our own behavior? Well, this is how we do it. So this is one example of rules. For example, let's say you want to risk per trade 0.4% of your account, or let's say 0.5%. Let's make it simple, right? Let's make it simple. Let's just make it simple, because 0.4% can be a little bit complicated. So of your account, okay, of your account. So you want to risk how much? You want to risk 0.5% of your account, right? So if you are targeting the risk reward ratio of, let's say, 2.5, then you will earn how much? You will earn roughly 1.5%, right? Actually, no, 1.25%. So you will earn 1.25% of your account. Explore with KSG. Thank you for coming. So the number of trades per day should be 1 to 2, sometimes 3, but let's make it 1 or 2. That's more than enough. Time period should be 1 hour after London session starts. So you can only trade up to 1 hour after the start of the London session. So don't trade before London session, and also don't trade after 1 hour of London session. So let's say these are the rules which you have to follow. This is just an example, all right? Just an example. Okay, Explorer G, you have come to the right place. You can earn a lot of things. I mean, a lot of trading skills on this channel, OctaFX YouTube channel. So you can trade just 1 hour after the start of London session, but you shouldn't trade earlier than that. And then you exit whichever happens earlier. For example, if your profit is achieved, you exit. Let's say you are earning 1.25% of your account per day, just exit. Let's say you have not been able to find any trade in 1 hour, just end it, don't trade. And let's say you have also done 2 trades for the day and you haven't found anything. I mean, no profit, no loss, or maybe some profit, some loss. If any of these 3 things happens, you just exit the market. Okay, so this relaxing sleep music G, this video will be available after this video will be available after the session is over, so don't worry about that. Okay, so Ghotona Ji is asking, sir, kya time? So the time for news for London session is nowadays it's 1:30 p.m. in the afternoon Indian time, 1:30 p.m. And Phoenix G, the same question. And in summer, so this is winter now, right? Currently we are in winter, but in summer it's the opposite. So in summer the time will be 12:30 p.m. So 1 hour, there is a lag of 1 hour, difference of 1 hour. Okay. All right, so let's go ahead now. So any of these things happens, you just exit the market. You go ahead and close your trading platform. This is what you do once you have achieved any of these 3 things. Now about the trades, the trade setups I have already taught you. If you want to look at the videos which I have given on this channel, you can please go back and search the videos. Okay, the gold also, you can trade gold in 2 sessions, New York session as well as in London session. So the London session time for gold, as I said, is nowadays it is 1:30 p.m. 1:30 p.m. Indian time, and gold session time is also in New York session. So you can trade gold in New York as well as London sessions. And the New York session starts at 7 p.m. Indian time. Nowadays it starts at 7 p.m. Indian time. Otherwise in summer it will start at 6 p.m. Indian time. So that's how we trade our gold. Yeah, Karthik Ji, I'm saying you can only trade up to 1 hour after London session. Up to 1 hour. I mean, it's not you should start 1 hour after. No, I'm saying that you should start actually at the start of London session, which is gonna be at 1:30, right? So you will start your trading session at 1:30 and you will end your trading at 2:30 p.m. Simple, isn't it? Very simple. Because you will start at 1:30 and you will end at 2:30 p.m. And also if you want to trade in New York session, it's so straightforward. You can also do 1 hour of trading in New York session. That's okay. That's perfectly fine. And I think you can very well do it, because in the evening time you will be free from your job or your education, whatever you are doing. So you can do it. Okay, the time in GMT, Akeem Ajao Saab, Akeem Ajao, the time in GMT is 8 a.m. GMT. In the morning, 8 a.m. GMT. According to GMT, it's 8 a.m. nowadays, and 7 a.m. in the summer. So that's how it is. Now let's go ahead. Why do you make trading errors? Why do you make trading errors? Well, first of all, what are trading errors? What are the types of trading errors? What kind of trading errors do we have? Okay, so trading errors. So these are the types of trading errors which you normally make. Move your SL. Move your SL away. Welcome, Akim ji. Number 2, don't put SL. Don't put TP. And there are so many more trading errors. Full margin trading error. So that's a big one, I think. Thank you for mentioning this. Full margin trading error, I think it's just disastrous. Full margin. Okay, guys, for those of you who don't know full margin, Nobi Trader wants to say that when you trade full, I mean, when you have $100 account and you wanna exhaust your account, you put such a big lot size, big position size, that your entire account is exhausted. That's full margin error. Okay, so can you guys please ask me these questions in English, because this is English webinar, although I understand Hindi. Okay, submit trend channel, moving average. Okay, so abhi mein seek. Okay, so you are learning, and 50 USD you are putting, and $5 profit. Wow, that's amazing. That's really amazing, Gotona ji. That's amazing, really amazing. If you are able to earn $5 on your $50 account, that's amazing. So you are making 10% every day. That's beyond amazing. Let me assure you, you are doing excellent work. But you should learn to know something about trading psychology. This will help you improve your performance. Okay, so let's go ahead now. So I'm saying that you make trading errors because of fear, right? Okay, hedging error, that's also right. Yeah, sometimes we just do too much hedging. So guys, why do you move away your SL? Why do you move your SL away? Because you don't wanna admit being wrong, right? This is just one way. This is just one example. Okay, so Saeed Mohammed is asking, sir, please explain about key level. Okay, Saeed Mohammed ji, please go to other webinar of mine which was given 2 weeks ago. In that we have discussed thoroughly the key levels. But for now, I'll just tell you that key levels are the long-term horizontal resistance and support levels. Okay, so that's it. That's simple. Praveen ji, welcome Praveen ji, welcome to this webinar. So why do you make this trading error? Because you don't want to admit you are wrong. You don't put your SL. Why? Because you don't believe that anything can happen. You don't believe, or maybe don't know, that anything can happen in the market, right? So you don't know, or you don't believe that anything can happen in the market. That's why. Yeah, Nobi Trader, you're right, because you are also hoping that the price will reverse. The price will reverse. You are hoping that the price will reverse. And why don't you put your TP? Because you are just too careless. Maybe you are too careless about the profits. That's why. Okay, so you keep moving your SL in the direction of your trades. That's quite amazing, I would say. That's really good. Gotonaji. Okay, so guys, we want to discuss a little bit more about this. Why? Because of three possible things. One, because you don't want to follow the rules, you are not following your rules. And number two, because of the fear, you have some fear. And number three, because of self-sabotaging beliefs. Now, what are these self-sabotaging beliefs? We will discuss that. So, what are the self-sabotaging beliefs? First of all, now self-sabotaging beliefs come into the picture much later. Self-sabotaging beliefs will happen because you think this is too much money, or money is dirty. So why do we have self-sabotaging beliefs? Because sometimes our childhood upbringing is in such a way that we think that money is dirty, or this is too much money, the trading is too much. That's why. How do we know that our rules are profitable rules? Do we need to try rules 100 times? Well, Nobi Trader, you can do either of these two things. One, well, thank you. Actually, first of all, thank you, Nobi Trader. You are asking amazing questions. So thank you for that. You can do either of these two things. One, you can either follow the rules of some experienced trader, some trading teacher like me. So you can just follow my rules, which I have given you. Or number two, you can make your own rules and follow them initially. But you have to learn them first, of course. So you have to learn the rules from experienced traders like me, or from the books. You wanna learn from the books. I will recommend you to read the book of, actually this guy has written 2 books. So you wanna learn from him, from me, and some other traders like us. So learn these rules and then fine tune them according to your own situation. Just turn them into your own rules and then experience them. Just follow them for maybe 100 days or for a few months, and you will get to know whether or not the rules are working for you. If the rules are working for you, amazing, that's great, go ahead. And if the rules are not working for you, you can change your rules, no problem. That's also possible. That's actually totally fine. You can change your rules, not a problem at all. Okay, so these are the 2 ways in which you can learn the rules. Okay, so Avijit ji is asking, sir, spike के time trade लेना चाहिए, please बताइए sir. Okay, so Avijit ji, spike, you can take the trade in times of spike, but I will recommend you, if you are a newbie trader, you just started, beginner, and then I will recommend you that you should stay away from news spikes, at least in the beginning. So guys, now let's talk about the 4 fundamental fears. There are 4 types of fears which we have. One is the fear of missing out. Why do we have these fears? So what are the 4 fears? FOMO, fear of missing out. Number 2, number 3, and number 4. So these are the 4 types of fears. Fear of missing out. fear of losing, fear of losing, fear of being wrong, losing money. So losing money, you don't want to lose money, right? Avijit ji, welcome. And then in the end, fear of leaving money on the table, right? So these are the 4 types of fears which generally plague the traders. Saurabh ji, please bear with me for a few minutes. We are gonna discuss the code, the promo code at the end of the seminar, at the end of the webinar. So okay, let me write the promo code over here. Saeed 100. So this is the promo code. But in the end I will show you this code again, so nothing to worry about. If you miss it right now, no problem, because I will show you this code in the end one more time. Nobi Trader, you are right. Actually, I call this like this. So the acronyms which I have given them are FOLMO. This is FOLMO, fear of losing money. FOLMO, fear of being wrong. So this is FOBO, wrong. And in the end, you have fear of leaving money on the table. So this is a fall tab. Now let me explain. Let me go over these fears one by one. Akeem Ajao ji, please contact admin. They will tell you how this code works. So don't worry about this. The code works. Okay, so let's go ahead with these 4 fundamental fears. Fear of missing out. So when you have this fear of missing out, what you will do, the FOMO, if you have this, you will put trade in the wrong places. You will put trades in the wrong places. If you have this fear of missing out, you will put trades in the wrong places. Okay, Avijit ji, I have already discussed this trend channel stuff in our previous webinars. Please go back 2 webinars. There are all these things we have discussed. Barkat Ali ji, I have discussed about MT4 and MT5 in the first webinar. So I think MT4 is suitable for you. This is something I can tell you right now. MT4 is suitable. Don't go for MT5, because MT5 is for stocks, mostly for stocks. MT4 is for Forex. Yeah, so FOMO will cause you to buy at the top and sell at the dip. That's right. Nobi Trader ji, you're right. Put trade in the wrong places. So buy at the top and sell at the bottom. Why? Because you don't want to miss out. Let me give you an example of FOMO. Let me give you an example over here. So let's say you are sitting in the market, okay? And let me run the market data like this, okay? So now you don't have anything like this. So let me remove all the pictures, okay? So this is the market, right? Let's go ahead. So I'm sitting in the market and I'm looking at this. Oh my God, the market is going up. But I'm too afraid. So I have fear of being wrong. Okay, so I'm not doing anything. I'm completely paralyzed and immobilized. And then I see this bar. Oh my God, the market is really going up. Maybe I should do something, okay? No, but it's not going up. So, okay, let's just stay here. I don't know what's gonna happen. I am unable to decide. So let's see what happens. Oh no, shit, the market is really going up. So what should I do? Oh no, the market is really going up. So what should I do now? I should buy over here. Okay, so I will buy over here. I'll buy here and I'll put my stop loss maybe somewhere around this level, and I will put my TP over here, right? So I'm targeting the risk reward ratio of 2. So this is my fear of missing out, because I have already seen that the market is going up. So what should I do? I'll just buy, but I'll buy in the middle. So what happens next? Well, you guys can see this. The market is going up and I'm happy. So I'm not taking any profit. Why? Because of this trading fear called full tab. Fear of leaving money on the table. So I'm not even taking some partial close over here, which I should do. Why? Because there is this resistance. The main resistance is coming up. So I should take at least some partial exits over here, so that even if the market goes down, I'm out with some profit. But I won't do this because I have fear of losing money and fear of leaving money on the table. So I don't want to put any money. I don't want to lose. I just don't want to leave any money on the table. So what I will do is I will not take any profits. Okay, let's see what happens. Okay, now the market is going down, but even then I refuse to take the profit. And now I am in loss, right? So now the market is going against me. The market is now going clearly against me. So what should we do now? What should we do now? We are in the loss. So now the other fear will come to awakening. So there is this other fear of us, which is fear of being wrong. So I don't want to admit that I'm wrong. FOBO, fear of being wrong, the third fear, right? So I will not close this position. Rather, I will move my stop loss away. I will move my stop loss over here, hoping that it might just reverse from here. Debnath ji, you are right. Okay, so the market is falling on me and I'm unable to exit my losing position because of fear of being wrong. I don't want to admit that I'm wrong. It's okay, man, just admit that you're wrong and just exit the trade. Get out of here. But no, I'm just too egotistical to do that. So what happens? Over here, the market starts going in my favor, and then I say, oh, okay, it's finally going in my favor. And then what happens? It's going up again in my favor, but I failed to realize that there is this guy right here. Look at this bar. There is this bar. It will prevent the market from going up. Remember the reference line. It failed. I mean, the market is not going to go up from here because you remember the reference line. I already told you that when the market is here, it will be affected. It will be affected by its past. So here the market will get effect from this. Okay, I will discuss this EMA in our next upcoming webinar series. Said Mohammed ji, please give me some time, because today we are discussing psychology. Or you can ask me this question in the next session, because the next session is about sharpening your saw, how to make your trading practice, and the session one, the session which is after the next session. So the next session, that's gonna be about the questions and answers. So you can very well ask me these questions, no problem about that. Okay, so what happens now? I'm in trouble. Actually, I'm not in trouble because I already bought at where? At this point probably, right? No, we bought over here, right? So we bought over here. Now it's already going in our favor, and I think this is the place where we should exit. But again, the fear of leaving money on the table. Why should I leave some money on the table? You guys understand what's the meaning of fear of leaving money on the table? Leaving money on the table means that you think you deserve more, but the market is not giving you more. So let's go ahead now. Now what happens? the market is falling. The market is falling. Now is the time to exit, but we don't exit. The stop loss was here, and now we are moving our stop loss down. So it goes down. Okay, still there is chance to exit, but we don't exit because of what? Because of fear of leaving money on the table. And then the market starts falling. And now let's see what happens. So the market goes up and then it comes down. Okay, so now look at that. Look at that. The market is not able to go up, and then finally the stop loss is soon to be hit, and we are being stressed out. We are unable to understand all this, so we move our stop loss further down. So now this turned into a bigger loss. Then what happens? We are finally stopped out over here. As you can see, the stop loss got hit over here, right? So we got out, but with huge loss. Why? Because of all these fears. Can we avoid all these psychology mistakes? Is it better solution to use robots? No, I will ask you not to use robots, because robots can make so many errors which you cannot. Sometimes the robots will just go wild. So don't use robots. You want to learn the art of trading psychology. Don't avoid your psychology. Face it. The greatest traders in the world, the professional traders, they have evolved beyond this mindset of the common typical trader. And you will never hear professional traders you will never hear about them using robots or EAs. Professional traders, they always do discretionary trading. What is discretionary trading? It's when a human is doing the trading. So a professional trader never delegates the trading decisions to robots. So don't use robots. So you should learn. You should learn to pay attention to yourself, to your mind, when you are putting this trade on. When you are putting this trade on, what's going on in your mind? What are you thinking? Why are you unable to compare the markets? Sometimes, if you know the analysis, it's so easy, isn't it? It's so easy. Let me just show you where you should have bought. Okay, so you can see there is this long-term support line, right? This is long-term support, isn't it? So you can see that there is this long-term support, and then the market comes down to the same place as there is this long-term support. It comes back down to the support level. And what do you see here? There is a very, very clear spring, right? You just buy over here. Just buy it. That's it. Just buy. And all this time, don't do anything. Just wait for the market, because you see the market is coming down. The market is coming down. So let's make a trend channel over here, and I will put my trend channel like this. Okay, now it's also oversold, right? So if it's oversold, and you can see that there is this testing going on, and you can also see that there is this bag holding, right? There is this bag holding bar. There is this bag holding bar, and then you have final spring. Just buy over here. What are you afraid of? There is nothing to worry about. There is nothing to be afraid of. Nothing to fear. And one more tip which I will give you is accept the risk of your trade. Always accept the risk of your trade. Accept the risk. What do I mean by accepting the risk? Accept the risk of your trade. Now, how will you accept the risk? Well, you can accept the risk by doing these things. One, put small position. Fully accept that it can turn into a loser trade. Just fully accept this. Sunil Kumar ji, I don't know what you are asking. Can you ask me this question in details? I don't understand your question. Okay, so accept the risk of your trade. Number one, put a very small position in proportion to your account size. Number two, fully accept that it can turn into a loser, and that's no problem. And that's not a problem. It's completely fine. If your trade turns into a loser, completely fine, no problem at all. I mean, just accept it. It's just fine, no problem. And know this. Know what? Know this. Professional traders can take a lot of losing trades. No problem at all. Nobi Trader Ji, I already told you no, don't use EAs. Don't use EAs. So what can you do? You can just go ahead with this decision. Accept the risk of loss and know that the professional traders, they take losing trades all the time. No problem at all. It's really no problem. And number 5, if you do it right, the money will take care of itself. Believe me, this will happen. Believe me, this will happen. If you do it right, just follow the rules. Always tread on the edges. Always follow your strategy. Always follow the risk management guidelines. And remember this word. Remember this guy. This is the important word, most important word. Discipline. Discipline is the key. So, if you follow everything, if you follow your rules and do it with firm discipline, and even then, if you lose your trade, really no problem at all. Because you know what I am afraid of is not the market. Actually, I am not afraid of the market. Why? Because I know market cannot do anything to me unless I do it myself. Unless I put the trade. Nobody is forcing me to put any trade. To put SL at this level or this level or this level. Nobody is asking me to do anything, right? So everything is done by me. I'm the boss. So I should be fearful of myself, not the market, because the market cannot do anything to you. It's only you who can do a great damage to yourself, to your account. So you should take care of this thing. And don't be taken aback when you are losing, because professional traders can take losing trades and it's not a problem. Okay guys, so let's go ahead now and take a look at the other fears. Okay, now you see the market is coming back to this level, right? So you can decide there. You can put the trend channels over here and you can decide whether you should buy or sell. Over here, the market is still gonna go up a little bit at least. Okay, so Akeem G is asking for intraday trading, I think 5-minute time frame or 3-minute or 15-minute. So you can use these 3 time frames. For intraday trading, you can use 3M, 5M and 15M. I think this is it. All right, so let's go back to our fears. Okay, so this is not David G, this is not a book. It's actually the picture. Look at this. It's a picture. It's a picture. It's not a book. If you wanna read the book of this guy, I will recommend you in the end. Okay, so let me give you the names of these 2 books written by two books by Alexander Elder. One is Trading for a Living, and the other is Come into My Trading Room. Okay, so these are the two books. You wanna learn discipline and rules, you can learn them from these two books, or you can take our webinars. We will give you all the material, so you don't need to read the books. You want to read the books, fine, that's okay, but I understand it takes a lot of time, so we are here to give you all the material from the books. Yeah, Zoeb Khalid ji, you are right. In this spring trade, this one, there is also an NS bar. Yeah, so this guy right here is the spring as well as NS. It's both. So that's why it's amazing trade, isn't it, Zoeb Khalid ji? Right. Okay, so Vijit ji, you have to wait for one candle as long as the time frame is. So for example, this is 5-minute time frame, right? So you have to wait for 5 minutes for the next candle to form. What is the best time frame to use? It depends on you. It depends actually on your trading style. So please also give prediction and make channel or trend channels on 4-hour, daily and weekly. Okay, so we will do this in our live trading session, Yalla ji. We will do this in our live trading sessions, which we will have in the future, hopefully. But let me just give you a little bit of that, because I just want to give you some material. Okay, so let's go to, let's say, 4-hour time frame. All right, so 4-hour time frame, I'll just do it for you guys. Okay, so the 4-hour time frame seems to be, the trend seems to be up, right? So the trend seems to be up. So what we will do is we will make a trend channel over here, just like this, and I'll put it like this. I'll make it maybe green, and then I'll put another one, clone this and put it over here. And now I'm expecting the market to go up at least, and I will go to, let's say, weekly time frame, and I will also check for the market, where the market is going. Okay, the market seems to have left this range. The market is in solid uptrend, so the market is gonna go up from here. And if you want to target, then I will say that you put your target somewhere around this level. Okay, so you buy, if you buy here, then your target, first target is this one, and the second target should be this one, and the third target should be this one. Okay, so these are the targets for you. You can note down the targets. Okay, so I'll go back to my 5-minute time frame. You can look at this after the webinar is over. So we were discussing about the fears, and if you are plagued by fears, you won't be able to function well in the markets, right? So look at this now. So we have this trend channel going up, and let's put the trend channel up here. So this is the trend channel, and I'll clone this and put it over here. And now we don't know what's going to happen. Seems like the market is going to break this resistance. It seems like this. Sir, how much lot and 100% bonus achieve value, sir? Please explain. Okay, so Ujiji, let me answer this question, but just give me 1 minute. What is the best indicator to use for any time frame? Okay, so NOG, Jonic NOG, I will say that if you just use these trend channels and just make use of these volumes, I think they are good enough. You don't need to use any indicators. But if you want to understand indicators, if you want to learn to use indicators, I will have some webinars in the future. So please bear with me, okay? We are gonna have some more webinars on this. EHA पे trade लेना चाहिए. EHA, yes, you can. But let me answer the question from Ujiji. So Ujiji is asking how to achieve 100% bonus. So there is this promo code, which I will show you in the end. If you use this promo code, then you can achieve this promo code. Just use promo code and you can achieve the gains. Okay, 100% bonus. Okay, now discipline is the most important thing. As I told you, I'm just again showing you the picture of this guy, right? The picture of this guy. Look at this. What is he saying? He's saying discipline is the key. Ujiji, congratulations on your bonus. Congratulations. Okay, so convince yourself that you deserve money. Self-sabotaging beliefs. Remember, we were talking about self-sabotaging beliefs earlier. How do you overcome these self-sabotaging beliefs? You convince yourself that you deserve this money. It belongs to you. It's yours. It's yours. It's your right to have this money. So, if you convince yourself, then the only thing is that you should follow the rules and you should follow these habits without any lapse. Okay, so Yalla ji is asking, sir, how to bold bars in TradingView. Okay, Yalla ji, please look at this. Now, what I'm doing right now is I'm putting this over here and making it thin and big, thin and thick. Okay, so big and small, number one. Number two, you can double click on this, double click on the bars, and there you have it, thin bars. You just, probably your bars are looking like this, right? If your bars are looking like this, I think they don't look good. So you should double click on this and thin bars. Look at this thin bars, just uncheck this, and there you have it. There you have it. Okay, now you have bold bars. If you increase or decrease the size, they will become thinner and thinner or thicker and thicker according to the size you allow them to. Okay, so let's go back to our discussion on the 10 habits of a successful trader. Always put SL, no matter what. Just always put SL. Do backtesting every single day. This is something I recommend. Do backtesting every single day. Be realistic about your targets. Just don't think that you can achieve $1 million within one day or within 1 month. Well, probably you can do it in a few years. But in 1 month, you cannot earn $1 million because 1 month is too short. You need some more time to earn big money from trading. Believe me, it is achievable. People do it. You can do it also. And number four, follow your rules. First of all, make your rules, of course, but always follow them. Do as few trades as possible. As I told you, 1 or 2 trades per day, maybe 3. That's okay. But not more than 3. Not at all. And then always take care of risk management. Always put small lot size. Be patient. What do I mean by patient? Well, you see, if you are in a hurry to trade, you will lose it. You allow the market to come to a certain place and then you put your trade. That's a recipe for success. So you wait for the market to come to your place. The best time for trading, if you are a day trader, the best time is to do London session and New York session. If you are living in India, London session starts at 1:30 p.m. nowadays in winter, and in summer it starts at 12:30 p.m. London session. About the New York session starts at 7 p.m. nowadays because it's winter. In summer, the New York session starts at 6 p.m. Indian time. Okay, the next, spend maximum 1 hour per 1 hour trading per day, not more than that. 1 hour. Nobody trader, you are right. Don't overtrade. You're right. Number 9, never be careless or greedy. These are the two opposite sides of the same coin. Sometimes you are greedy, sometimes you are careless. Don't be that. And number 10, always keep learning from webinars like this. And in the end, please take it easy. Take it slow. Do it slowly and plan for the long haul. There is no need to hurry. The markets are there. The markets will always be there. If you are in a hurry to make money, believe me, you will lose it. Just take it easy. Take it small. Take it patiently. Okay, so I thank you everyone for your time. I appreciate your questions. I appreciate that you spend time with us. And now let me take you to the promo code. So you want to look at the promo code? Please take a look at the promo code. This is something I was talking about earlier. If you make a deposit of, let's say, $1,000, you make a deposit of $1,000, the OctaFX, and if you use this coupon code, this promo code, OctaFX will give you $1,000 more. So your total balance will be $2,000. Okay. Thank you, Akimji. Thank you very much. Thank you, Rao Saab, Rashid Rao Saab. Thank you. And let's say you wanna deposit $100. OctaFX will give you $100 from their own. So your total balance will be how much? $200. And if you want to deposit, let's say, $500, OctaFX will match 500 more from their side if you use this promo code. To sum it up, if you use this promo code, your balance will be doubled on the first deposit. So you want to double your balance on your deposit? Just use this promo code. ExploreG, thank you. Thank you for your kind comments. And with this happy note, guys, Himatariji, thank you. Thank you so much, Himatariji, for coming. With this happy note, I will leave you with best wishes and with a hope that you will try and learn to be a profitable trader in the long run. Believe me, you can earn lots and lots of money from markets if you are a disciplined trader. And today's whole discussion was about discipline and psychology. Okay guys, so that's it, and I will leave you over here. You can enjoy OctaFX video one more time. Thank you very much, Khalid Arif ji, and thank you very much, Rajesh Bansali ji. Thank you very much, Asad Malik Saab. Everybody, thank you so much, and I will leave you with this happy note. Thank you for coming, everyone. Take care, goodbye, and good night.